Okay, so first of all, I want to welcome everybody to the webinar. Thank you for being here. This is Roger Royse. I'm the founder of the Royse Law Firm, and this is our webinar series. This is one in a series of technology webinars that we have this spring. We've already had several webinars on interesting topics: fintech, fintech, VR, AR. We've got programs coming up on health technology, crowdfunding, water tech, and foreign investment in U.S. real property. Today we're going to talk about artificial intelligence. This might be one of the more interesting and more futuristic topics that we've covered, since this is the technology that certainly will define us. It could fundamentally change the lives of billions. It'll help us make better decisions. It can drive our cars. It can even entertain us. We'll find out today. It can help us produce food, and it can help us make financial decisions. So we've got a great panel here today that I am going to introduce in a minute. For everybody else, I'd like to remind everybody that this webinar is being recorded. You can find it after the webinar. It'll be posted on royseuniversity.com, the webinar page. It'll also be available as a podcast, available for download in the iTunes store. And you will also find it on the Royse Law YouTube channel. You'll notice we're using GoToMeeting. In the lower right-hand corner of your, or probably upper right-hand corner of your screen, you should see a dialog box. That dialog box, you can ask questions. Go ahead and post your questions. We'll gather those and ask our panelists to respond to those towards the end of their presentations. So our panel today, we have 3 or 4, depending on who can join us as we go along, panelists, all of whom are very active in the space, a very technical panel as far as our panels go. Hussein Mehanna, he's Director of Engineering at Facebook of Core Machine Learning, and the Core Machine Learning Group is part of the Applied Machine Learning organization at Facebook. Their charter is to advance machine learning through applied research and prediction, personalization, deep learning, text understanding, and large-scale machine learning AI. We also have William Mok. He's been a presenter with us before. He is a trader, an inventor, and an artist, and is currently working with MSI Studios? Tech trader. He's currently a tech trader now. He's previously with MSI Studios. And been very active in the online gaming communities. He's been a programmer. He's created short films. He's done a lot of different things, and he brings a wide, varied experience to the area of AI. Robert Stray will hopefully join us in progress as we go along. Robert is founder of a company called Pete AI. They're an artificial intelligence ag tech startup based out of Germany. They certainly have been making a lot of waves here in Silicon Valley. Babak Hodjat, he's the founder and chief scientist at Sentient Technologies. He's a entrepreneur technologist. He has extensive engineering management and experience, and a very solid understanding of artificial intelligence. As I said, he's currently the founder and chief scientist at Sentient. He's previously a founder and CTO of MobileVerse, which was a SaaS platform for mobile marketing. And then finally, Ephraim Lindenbaum is the managing director at Advanced Ventures, which is a Silicon Valley-based VC fund and venture accelerator that invests in seed and early-stage startups across sustainability, mobility, and information technology. F has some experience and some background, and will give us the VC perspective on this whole area of artificial intelligence. So with that, what I thought we would do, true to our usual format, is to go ahead and let our panelists introduce themselves, talk a little bit about who they are and how they come to the area. And while they're doing that, make sure that you post your questions in the question dialog box. We'll gather those, and at the end of the presentations, we'll come back to a general discussion. So with that, Hussein, I wonder if we could go ahead and start, and you could give us a little description of who you are and your role in this.
Sure. I joined Facebook about 4 years ago. And when I joined Facebook at the time, it was sort of approximately a month after the IPO. And I wanted to work on the advertisement system that we had, particularly the artificial intelligence component, because I really believe in Facebook's mission of connecting the world. And it was important for me that, particularly at that time after the IPO, that we demonstrate Facebook's ability to monetize. And so I went through an interesting journey with AI over the last 4 years, not just in ads, but overall through the rest of Facebook. And I've seen how AI has developed really fast within Facebook and the impact it has had on the entire company. I also realized that AI has several bottlenecks before it becomes democratized or commoditized, before it becomes something that everybody else could use. Because if it actually becomes a tool that everyone could use, as you just highlighted, it could be used in helping us produce more food. It could be used in helping us diagnose diseases earlier. It could help humanity essentially solve a lot of its problems, given that expertise is a rare resource. At the same time, I don't think that artificial intelligence is a source of evil, unlike unfortunately a wave that has happened particularly around last year. I think artificial intelligence is just a tool that humanity could use, and there are going to be far more advantages and benefits to AI than disadvantages. What I'd like to share in the remaining 3 minutes today is a particular area that we've been working on at Facebook, particularly my team, which is how do we make AI democratized for Facebook engineers. So at Facebook, we have engineers who are working on various parts of the website, like the newsfeed system, where more than 1 billion users a day actually log on to the newsfeed and they start interacting with the stories that their friends have posted or shared, like advertisement, like search, like Instagram, and even other parts. As you know, AI is everywhere in the website, as even as small as the notification jewel that you get at the top, which tells you your friend or someone has liked your story or commented on it and so forth. So we use machine learning across the board. We found that machine learning, when I joined in 2012, required PhD graduates or experienced data scientists to be able to apply them to the various problems that we had at Facebook. And we found that the reason behind this is because the systems and tools that were available were extremely thin and rudimentary, and required enormous amount of expertise to operate. So part of what we did is, how can we build a machine learning platform that lowers the barrier to entry so that more and more engineers at Facebook can leverage these tools. And we found that developing large-scale software that is able to learn from trillions of data points every day extremely fast is important. We found that building the platform using a team that consists of diverse skill sets, so not only machine learning experts, but also, or AI experts, but also strong system engineers and even product engineers who build nice and usable user interfaces. So we combined all of these together, and we built the FB Learner platform, which caters to the experienced engineers, and it helps make their work usable by a whole group of other engineers who may not necessarily understand the details of AI. And actually, one of the interesting trends we're starting to see is that even non-engineers at Facebook are starting to use the platform. So currently we have 1 out of every 4 engineers at Facebook using the platform. They're interacting with it to train new machine learning models that could improve the user experience or even make the engineer's job easier. We train hundreds of thousands of models every month, and we deploy several thousand of these to production where the users start experiencing these models. And so if I compare between now and 2016 and in Facebook in 2012, we can see that the impact of machine learning by lowering the barrier to entry has helped Facebook a lot. We have a much more engaged community within Facebook. We have better products, and we can see that this trend is only improving. And I hope that I hope that we would get more chances to share this with the community. We're already working on explaining sort of the designs, writing white papers, and eventually open sourcing some of these components. Because I think if we democratize AI for the community, or if the community collaborates together and we all democratize AI, I think the benefits are going to be enormous. It will help AI in medicine, and AI for the environment, and so forth. And I think that would help the community in general solve far more problems than we've ever seen before.
Okay, well, thanks very much, Hussein. I appreciate that. It's good to know what you're doing over there at Facebook in this area. So our next presenter is William Mok, who actually has a little video, I think, that you're going to start with. But go ahead, William. I'll turn it over to you.
So a little bit about myself before I begin. My name is William Mok. I started programming when I was 12, mainly self-taught. Most of it was from video games and web design. So the kind of programming I was doing was either hacking the game or building scripts to beat other players. When I turned 14, I taught myself to do short film and music. And then when I turned 18, I dabbled into the stock market for a bit before eventually building a system that automated all my trading. That system is called TechTrader. And let's see, so essentially the main idea behind TechTrader is that it's not really a tool. It's more or less a program that mimics the way I trade. And so one thing that people always get confused about when I bring up TechTrader is that they think it's something similar to Wealthfront or to TradeStation, something where the human has input into the system and is using it to manage their own portfolio. One thing that's hard to grasp is TechTrader more or less is its own person. TechTrader has been running for 3 years now. We call it fully autonomous because there's actually no human intervention in the entire process. There's no model tweaking, there's no intervention or discretion on the execution. TechTrader actually picks his own stocks, comes up with his own strategies, and then does all the trading without any supervision whatsoever. It's been running with no updates, no code tweaks for over 3 years now. And one thing that we always bring up is that the system is not quant. It's also not stat art. And most importantly, it's not high frequency. When you actually look at the way the system trades, it actually is indistinguishable from a human investor. Some of our brokers actually were not aware that we were automated, but we actually told them that we use an automated system. To them, the trades coming in look just like if I were to put in the trades myself. The only difference, of course, is that what the system does is it replicates what I'm able to do as a trader, but thousands of times over. So myself, I traded for 3 years through college, and one thing that was always my limitation was not my ability to actually make trades on a particular stock. It was the fact that I could only watch a few stocks at a time. So what this system is able to do that I can't is that it's able to watch thousands of stocks simultaneously. It's as if I was able to clone myself and have an army of traders as opposed to just myself. So one interesting aspect about the way the system is built is that there's a, let's see, I need to phrase this correctly because a lot of times when I say that it's automated or there's artificial intelligence, a lot of people jump to big stereotypes. Like they assume that it's data-driven. They assume that it must have some kind of math model or that it's some branch of data science. One thing that's unique about TechTrader is that it doesn't actually use any stats. It's not math-driven. It doesn't even use big data. In fact, it's I would say that the footprint of the data it uses, it's no more than what you or I would look at on a daily basis. It's actually a very small amount of data. The reason for that, probably a lot of it comes from my background in gaming, but the way I built TechTrader, it's really modeled after how I myself think. In contrast to a lot of machine learning that's out there, it comes from more a statistical or model-based modeling background. So a lot of the machine learning that's out there, whether it be neural nets, deep learning, most of them fall into this bucket of classification or pattern recognition. What I mean by that, and it's not in like some derogatory way, it's the fact that they actually are not autonomous beings. They're not trying to make decisions. They're not trying to actually go out there and walk through the thought processes like I would as a trader. It's more or less trying to do statistics or data science at a huge scale, something that you or I cannot process. So much data that you or I cannot actually physically process at once. The difference here for us is when I looked at a lot of the machine learning algorithms that are out there, I saw them as more or less sensors for something like the body of a robot. So if you think about machine vision, you think about natural language processing, more or less, those are all different components of our five senses, but they're not really the brain, so to speak. You know, it lets us see the data, it lets us hear what we take in and process that, but it's not actually the brain making the decisions or, being the person. So the way I approached it is I took a lot of that, built the senses for the system to detect the movement in the stock market. So in other words, giving eyes to the system, giving ears to the system. But I went a bit further and I actually overlaid a decision-making process on top of that that would take in the inputs for traditional machine learning and then actually start trying to make decisions like an agent or a creature. So some of the algos out there kind of hint at this. So when I built the system, I built it from scratch. When I went out there and tried to research what the closest thing to what I was doing was, these are what I found, but they're not, I didn't actually look up these algorithms and implement them on the first try. I actually built the algorithms first myself, and these were the closest thing I found to what I was doing. The main difference with what's currently out there and what I'm doing, so a lot of the existing algos that they use for decision making, some of them reinforcement, Markov, decision trees, multi-agent systems, a lot of them are objective oriented. The way I built my system, and again, this probably comes from my gaming background, it's a lot less about the objective and more just about survival. One phrase I actually came up with recently when I wrote the paper on how I was approaching AI, we actually termed it cognitive artificial intelligence. The word cognatus actually comes from just existing. It means that, as a creature or as a being, you don't really try to seek certain things. You're just trying to survive. You're just trying to live. And that really captures the essence of the kind of AI that I do. It's not data-driven. It's not actually trying to optimize anything. It's actually just trying to exist. And for this particular system that I'm working on, the environment that it's trying to exist in is the stock market. It lives and dies by its trading. The other interesting aspect that I'm pursuing currently in a broader project is what happens if you actually let it learn its own objectives. One thing that I always like to point out as an analogy is, as a human or as any creature really, you might be born with certain instincts or some certain survival goals on your slate. But over time, you might learn to value other things that lead to your survival. And one thing that people haven't seemed to really touched on is what happens if you actually learn to value other things, such as helping other people over your initial goals. To me, I think that actually might be a key step to making an autonomous system with free will, metaphorically, of course. So for me, it actually, when you walk through like the thought processes, for example, what happens if a system that might start off just trying to amass resources starts to learn to help people to amass those resources, and over time, the value of helping people actually supersedes its own existence. That would be an interesting experiment, and I think at a macro level, that might actually simulate what a creature or a person would do. The last piece for the way I'm looking at AI a lot is, I mentioned before that a lot of the conventional machine learning out there is really just building the 5 senses. So as I mentioned before, the main difference that we take here is that we take those senses and we input them into a decision process. But the third piece that's actually, I think, most interesting is that, so even in this construct, even in this construct, the system here would be limited by learning from experience. And I think, you know, if you were, you could even look at like AlphaGo or Google's DeepMind. What a lot of people criticize them for is that they learn to play that well on sheer force, brute force, kind of learning millions of trials. But if the opponent were to do something that was completely unexpected or crazy, it might not catch on as quickly. It would need to go through another series of trials to actually learn that. For the system here, I compensated for that weakness by essentially adding a level of imagination. I approached that was I tried to think about how I as a person would try to be creative. So a lot of times when I make a decision, and I'm sure many people, when they try to make a decision, they don't necessarily just draw back on their experiences. They try to imagine what might happen to them, even if they've never experienced it before. For a general AI, that would be very hard, but for the stock market, it's actually easier because what you're essentially doing is you're building a simulator to simulate market supply and demand. So sometimes, even though you're in a situation in the market that you've never seen before, you can have some reasonable expectation of what might happen and simulate that going forward. The reason why I use the phrase simulation as opposed to just expected value or probability is that when you're trying to approach this as a math model and you're trying to look for expected value and probability, you're not treating the market like it's a game or like there's actual people on the other side. I'll give you an example. If the system were to make a trade, not only would it try to figure out what its own impact on the market would be, it would actually try to think of, if I'm in this position, could someone out there in the market see this and counterattack me, countermove me, right? It's like an actual game where there's other players out to get you, and every move you do, you have to be thinking about what other people might do back to you, not just what the expected value is and things like that. So that's the main piece, and this overall structure that you see here, the 3 pieces, senses, the mind, and the imagination. That's at a high level the way I thought about and approached the AI behind my system, but not by a long shot is it something conventional or that you generally hear about. Again, the AI I built would actually be pretty pathetic when it comes to data-driven problems. A lot of people suggest like price optimization or even self-driving cars, but the issue with the kind of AI that I'm working on is that it actually is not good at all at data. It's just good at adapting and surviving. And the other side of it is if you actually try to put it in a car, you know, it might be good at navigating with the car, but it won't take you to where it wants to go. It will take you to where it wants to go because the goal itself is not necessarily set. So that's my side of things. The main catchphrase that I like to summarize is that, at least on my side, the way I'm approaching AI is I'm essentially trying to build something that behaves more like a creature or a child than something that behaves like a tool. So that's TechTrader, and the overarching AI that I'm working on would be called Conatus. Thank you.
Okay, thank you very much, William. Fascinating stuff. So I'd like to turn this now over to Babak. Are you there, Babak? Founder, Chief Scientist of Sentient Technologies.
Okay, so just want to give a quick overview as to what we do at Sentient and our perspective on intelligence. Oops. Okay, there you go. So our mission is to solve the world's most complex problems using massively distributed artificial intelligence. Stress massively distributed because we believe that breaking the boundaries of a single data center is the way to achieve levels of intelligence that can solve the problems at hand today. We have raised a lot of money. We've been around for quite a few years. Inception was 2007. We filed a bunch of patents. We actually have 10 patents issued now, and 100 employees. So what are we doing with all of this? Well, we have garnered a pretty large processing capacity right now, more than 5,000 GPU machines at our disposal, more than 2 million CPU cores. And this is to run our AI in a massively distributed fashion. It's one of those things where, you know, when you start a company, you have this like hypothetical, imagine if you had a lot of processing capacity. When it actually does come down to it, you have to actually get those. And so what we did was we have sourced our own capacity. We noticed very quickly that building out many data centers or using Amazon or Google as a source of capacity is really not economically viable. So we've actually sourced our own capacity. And just to give you a flavor, I mean, these are some big numbers, but just to give you a flavor of the scale at which we can tackle problems. Our philosophy for AI is that typically AI is used to find patterns in usually in data. And then those patterns are used for decision making. So we do believe that AI needs to cover that full loop of observing the real world, orienting against it, deciding, and then acting. And then once it acts, to be able to observe the consequences of its action going through the loop again. This is the OODA loop. For those of you who have not heard this, this is actually an acronym that when they were looking into what makes a good, successful fighter pilot in dogfights in the Korean War, they noticed that it's not about having 20/20 vision or being very good at the instrumentation. It was about going through this loop very, very quickly. The faster you go through the loop, the better. And in fact, it turns out that the most successful applications of AI and machine learning have been in areas in which the entire loop is encapsulated and autonomously run. So that's sort of the philosophy behind our platform. We've applied it to several different domains and looking at other domains as well, but we do think of ourselves as a product company first and foremost. We have two products which have to do, number one is in the area of trading. Like William, we also have our own trading desk, our own hedge fund setup. The second product line is in intelligent commerce. But we do a number of research projects with the likes of MIT and Oxford, where we have tackled other domains as well. And I'll just give you a little glimpse of some of the other areas just to get the a feel for the broad applicability of the AI. So one of them is a research collaboration we did with MIT and University of Toronto, in fact. And the project had to do with arterial blood pressure readings in ICU patients. This is waveforms that are collected and anonymized, obviously, from more than 6,000 patients in ICUs. It's an imbalanced data set where the onset of sepsis usually is when the blood pressure drops severely low, and it only happens in a small percentage of all the patients, obviously, but it is a real killer. It's quite devastating. And the problem as posed to us was to be able to predict that 30 minutes in advance. So just think of having a 30-minute blackout period, and that was to allow the practitioners time to intervene. The other interesting characteristic of this particular problem is the false positives need to be very, very low because that intervention is costly. And we were able to get very high accuracy while keeping the false positives in the teens on this particular problem. Simply by applying our massively distributed AI to the problem. Another area that is of interest to us, and we actually have deployed, is in the area of intelligent commerce. Imagine yourself looking for a pair of shoes online to buy. It's a very visual journey. You look at the shoe and you immediately know whether you like it or not. You might not be able to actually articulate it, so that search box might actually not be of much help to you. How do you you know, articulate that little squiggly thing at the back of the shoe, or the way the laces seem to be working? So what we've done is actually we've used a flavor of deep learning to auto-encode features in images in large inventories for e-commerce sites, and use this auto-encoding is done based on similarities and differences of the inventory. In this case, shoes, but it could apply to dresses, glasses, what have you. Then we combine that with online learning, which is a means for us to, in real time, identify what subset of these features are interesting to the user. The user is really not dealing with the AI consciously. The user is dealing with a set of images that are displayed to them, and they're just clicking on the one that catches their eyes the most. But what is happening in the background is that the AI is helping them within a few clicks to get to the image that they like the most, out of a very large inventory of thousands of you know, in this case, shoes. And what we've seen is that we've been able to increase the conversion rate significantly, but perhaps more telling is the fact that in e-commerce, the user experience has not changed for the past 10, 15 years. And a typical e-commerce site, users only see about 10 to 15% of the inventory. So that's why the sites have to push out coupons and ads and so forth and target people to come and see the rest. And since deployment in November, we've been able to take that percentage up to more than 90%. So that's a pretty significant change in the user experience. Another area in that intelligent commerce system is you know, a step up on what is typically known as A/B testing in user interfaces or ads, for example, that are displayed. You know, in this case, we have this this web page, for example, and let's just imagine that we want the best web page possible to optimize on something. For example, optimize on the number of people who click on that "Do I qualify" button. What's interesting here is that the system can be given a number of degrees of freedom as to what it can change. You know, perhaps the background color, the fonts, the messages themselves, the image that it's used, the positioning, and so forth. It then combines these in various different candidate pages that it feeds to its user base. And as it does so, it identifies the more successful combinations, and thus the more successful sort of widgets or choices in creating this page in real time based on user feedback. And on the right-hand side, you can see that it's actually improving on whatever that success criteria defined for it is as the users are interacting with it. So it goes well beyond an A/B test. It's not A/B. It's many, many, many different combinations that can be tested out here. It is also real-time in that, you know, unlike typical A/B testing, where you do your A/B test and then you know whether A is better or B, and then you go with it. You can actually have this deployed And as things change, as the context of users change and so forth, you can keep up with them. The other interesting aspect of this particular technology, not displayed in this page here, is that it can actually do categorization on subsets of the users as well, and identify that this category of particular users are more interested in this particular display or web page or ad, and this other category and this other one. And you can discover, over time, some interesting trends. For example, these particular users are more interested in this particular web page at this particular hour of this particular day. And so you can make this much more dynamic than what is out there. And of course, finally, we do use a flavor of evolutionary computation to come up with trading strategies. So candidate traders that are also autonomous. They essentially see the time series of market data that comes in, and they make decisions fully autonomously as to what instrument, what kind of order, whether buying, shorting, selling, and the order type itself. Should I set a limit order, and at what price should I set that limit order? Should I do a VWAP or TWAP, stop orders, what have you? And then, in typical fashion of an OODA loop, as we mentioned, every time interval, it actually checks to see what the impact of its actions have been and makes the subsequent decision. So we have been trading live for a couple of years now, and the hedge fund is up and running. There are other areas. I won't go into detail, but just as a list of other areas where we've either looked at or are doing some projects, mainly either in research or in identifying the third product line that we would like to focus on.
Okay, well, thanks very much. Yeah, that's impressive. You guys are doing a lot. So now for the venture capital perspective on this. Lindenbaum, are you there? Okay, why don't you go ahead and let us know who you are and how you look at the space, especially from the investor perspective.
Great. Thank you so much, Roger. So my name is Ephraim Lindenbaum from Advanced Ventures here in Silicon Valley. We are an early stage venture fund that's been investing since 1999 in the Valley. We broadly invest across three core categories: information technology, communications, and sustainability. Today, that translates into a number of core verticals: financial technology, health technology, agriculture technology, and food technology. We've been involved in the broadly based artificial intelligence space now for many, many years. My background as an entrepreneur in Silicon Valley is actually in the media space, and dating back into the mid-90s, we were already using what today we look at as this broad term artificial intelligence for things like video compression, image compression, and so on. And certainly that has translated over the years into a number of different investment booms around this kind of core category, if you will. So what we've seen is a late 90s boom in artificial intelligence. And then certainly during the dot-com boom, there was a significant investment cycle there. And then in the early 2000s, in fact, there was quite a downturn in the category. A lot of the promise and investment that had been deployed in the category had really failed to produce the results that those of us on the investor side had hoped for. So much so that as we invested in, let's say, 2003 and 4 into, at that time, what we call natural machine learning. In fact, to that degree, artificial intelligence as a term was actually a no-no in the Valley, given the fact that it hadn't performed in prior investment cycles. So we were investing in 2004 in the use of artificial intelligence or natural machine learning in areas like communication security and anti-spam. And then in turn, we've seen a new boom here, and in fact, some of the data that we're now seeing in the category is, certainly quite compelling. I'll just run through a few high-level stats on what the global artificial intelligence market looks like here. Some of the most recent data suggests from 2014 to 2022, we're looking at CARG, or a combined growth rate there of about 25% per year, totaling out to about a $40 billion market in 2022. And that's the global market as well. And, again, that covers many, many different categories, in the broad artificial intelligence space, areas like expert systems, automated robots, intelligent assistants, embedded systems, and then certainly the artificial neural networks and some of the other categories that my other panelists had mentioned here. I think what's most interesting when we look at the boom and the bust cycles in any particular categories, I mentioned artificial intelligence, we're seeing, again, a very large boom in the space. In fact, just to give you an idea, as of right now, in the current year, as of the end of 15, about 19 artificial intelligence companies were funded in Q4 15 to the tune of about $98 million. We've now seen that grow. So if you look at it in Q1 16, about 25 companies were funded in the space. And just by way of statistics, that's a 7x deal activity increase since the first quarter of 2011. So certainly, we're mid-boom in the category. And, that certainly has great advantages to entrepreneurs if you're looking to raise money in the sector, but also on the investor side and as a category as a whole, that does create what we call froth or potential some overheating in the market. So from that standpoint, just to cover how we view it, we're a little more pragmatic. The excitement around the category is certainly interesting to us, but as we look at it, we try to apply it to categories that are meaningful, that can grow core businesses, and not necessarily looking for the buzzwords to drive an investment model. Some of my, panelists here have chatted about how they're applying artificial intelligence in their categories, and we certainly look to it in a similar way, how artificial intelligence can enhance our particular investment categories, financial technology, certainly health technology, and as well agriculture and food technology. And, to that extent, we're seeing a tremendous amount of mergers and acquisition in this space. There have already been 4 major acquisitions in 2016 in the category. Certainly Google is a major player in that area, as well as many of the others. So, when we look at it from the venture aspect, we're looking at it from a number of elements. Number one, that this isn't purely a buzzword that's applied to an emerging investment category. Number two, is the technology in whatever capacity really making a core difference? Is it a core enhancement? So, for example, we have companies in financial technology that's utilizing AI as a mechanism to enhance their models. We have companies in healthcare, or health tech, if you will, that's using artificial intelligence to diagnose migraines. We also have companies, in the ag and food space that are using that to understand the personalization of food and nutrition and elements like that. So, when we look at it, we really try and zero in on core value propositions, ways that this technology as part of a startup can enhance their value proposition and really grow and differentiate in the market. And, as we see this large growth or even potential overheating in the market, I think we need to be thoughtful about the fact that, the word AI is not purely a buzzword, right? That this is actual technology that's being applied in a meaningful way. We're seeing it in many of these different categories, as I mentioned. Certainly, areas like healthcare, financial, general information technology is certainly quite meaningful there. We're seeing a fair amount of technology in AI happening in different regions of the globe, Asia being very central to that dynamic as well. And in any market that's showing a level of growth, that we'd like to see like this is really making a major impact.
Okay, well, thanks very much, F. Let me stick with you for a minute, and maybe the rest of the panelists can weigh in on this. But as I was listening to you describe the boom in this area and the substantial increase in investment and in M&A activity, I guess I'm kind of wondering why, because I remember those early days as well when we kind of all just gave up on artificial intelligence and said, look, it just can't be done. It's just too expensive. It's clunky. It just doesn't work. I remember we kind of went through this 25 years ago, and it didn't take off, but now it certainly has. What's driving that? Is the technologies that's gotten way better? Is it that the market is now receptive to it? Is it there are business models that allow this to flourish? What do you think is behind this?
Sure, great data points there, Roger. I mean, I think when we look at it, there have been a number of core factors that have impacted. I think really one of the first and I think foremost models here is the concept of cloud or SaaS computing, the ability both in terms of network speed and in terms of processing and distributed processing to be able to lever much higher speed CPUs as well as systems to access this type of technology, number one. Certainly, our friends at Facebook with non-SQL databases like the Sandra has made larger data cycles there. And I think most importantly, much of this is being driven by markets themselves. So we've talked about things on this call like e-commerce, for example, certainly social networks like Facebook, as they look at image recognition and so on, as well as areas like robotics and so on. But I think the most important factor is those advancements are making a real impact in verticals. So if we look at a top-down, things like automotive, for example. Now everybody thinks about, Google's self-driving cars and elements like that. But really what we're in a lot of ways talking about are things like vehicle-to-vehicle automation, or even as simple as crash control technologies and so on. Certainly healthcare is a huge area of growth there. And this is where real businesses are using this technology. Certainly as was mentioned there, the sciences are very much covered as well. Now, to your point, as in any kind of emerging technology, we do tend to find booms and busts. Now, I will say, we are seeing, a significant revenue model attached to this. So as opposed to maybe earlier cycles in artificial intelligence where it became purely a buzzword but very little economic impact, I think this time we're seeing these major software vendors like Microsoft, Oracle, IBM, SAP, really kind of involving what has been historically BI or business intelligence, into this category. Certainly, a great data point here is IBM has filed approximately 500 patents in this particular category. So it's certainly very interesting, and it's moving into things like industry and commercial. And when we start to see, the rise of growth in places like oil and gas and retail and media, it certainly will stay. Although, to your point about boom and bust, the word AI was certainly, a word that in the investment world was persona non grata during various cycles over the last, certainly 15 to 20 years. So much so that when we funded our company back in 2003, Corvigo, we actually didn't use the word AI because it was, such a non-starter in the investment community. We actually used natural machine learning and/or natural language processing as a wink, wink, nod, nod to the broader AI dynamic.
Okay. How about the rest of our panelists? Any thoughts on what's driving the current trends now and the increased interest in this area?
Yeah, this is Babak. Maybe I can pitch in real quick. So, I believe at its core, there's a confluence of a number of developments in recent years. One of them is obviously the existence of very large data sets that, the whole big data that has been collected on the intuition that it will be useful someday, and seems like this is that day. So that's one. The second is the algorithms themselves. You know, it's not just that an algorithm can work better if you throw it more compute capacity or faster machines or GPUs. The algorithm should scale. If you look back 15, 20 years ago, yes, most of these technologies have been around for quite a while. Deep learning is nothing more than just neural networks. But neural networks didn't matter how much processing capacity you threw at them. They would not scale to be able to solve larger problems. Genetic algorithms, evolutionary computation, you could throw as much compute as you wanted at them, and they would still converge very quickly within an hour on a single CPU. So I think the actual algorithms, we have to give credit to the folks that have been able to scale those algorithms to be able to then tackle these larger problems that are more practical in nature, more broad, and you know, can do much more than your typical statistical analysis algorithm that you use. So, in my opinion, those are the main two drivers behind what we see now. Obviously, AI has a mystical side to it. There's as many definitions for AI as there are AI practitioners, and you know, there is definitely some hype going on as well. But there is a lot of concrete progress in this area as well.
William, you had some thoughts?
So for me, it's two parts. The first one is I agree with the previous presenters. A lot of it this time around is we have actual substance. So you know, we actually have results and algorithms that can do what we market them to do. The other side, for me, more personally, as I mentioned before, the kind of AI that I work on is not necessarily data-driven. It's more, you know, it's kind of like a creature or person. For me, I think what made that more possible was, so a little bit from my past, I remember when I first got into the gaming scene back in the early 2000s, pretty much gaming as a field was not taken seriously at all. If you think back to like the late 90s, early 2000s, anybody who's just doing games is kind of a joke. It's like a philosophy major. But now you look at some of the biggest businesses out there, biggest industries, they're all around gaming. Virtual reality is taken very seriously now, and a lot of the, you know, the most expensive graphics chips, a lot of them are actually devoted to gaming. A lot of the technology advances that we have are from these avid gamers. So that I think the availability of resources and just as a society starting to take, I guess, the arts more seriously, that helps make something like what I'm working on more accessible and more possible.
Okay, Hussein, did you have any thoughts before we move on?
Just a quick thing. I mean, it's not much different than what others have said. I actually agree that it's data, it's the compute power, but I think what we also need to realize, it's also it's just the maturity of computer science and the tech industry in itself, because AI sits at the top of the stack. And in the 90s, I don't think I don't think the stack was ready, not just for AI, but even for a lot of the other applications that people were trying to build at the time. I think the last thing that I just want to mention is that one of the reasons why we're also seeing a healthy uptick in AI is because now we see a lot of students interested and a lot of researchers putting their time and effort, and that's accompanied by the availability of data and compute machines. So you have the human element, you have the ecosystem, and so I'm not surprised that we're seeing an uptick. And I think it will continue for a short while.
Mm-hmm. You know, we've got a few minutes left. First of all, I want to remind everybody that if you have any questions, you can post them in the dialog box, and also that we are recording this webinar, so you'll be able to view it later. But in our last few minutes, I wonder if any of our panelists might want to give us some concluding thoughts, especially on what you think the future is going to look like, where this is going to go, what industries are ripe for this. We had one question about how this applies to agriculture, and I tell you, I've seen a few AI applications for agriculture. I'm sure you guys have also. But what areas are really ripe for, I don't want to say disruption, but for the application of this technology? You mentioned one, William, was gaming, and I know you're doing financial trading. Anything else that you might expect?
I think medicine is, yeah, this is Hussein. I think medicine is one area that is prime for disruption. I think we have the basic components. We have strong computer vision systems that could actually understand X-rays a lot better than before. And I think we have a lot of the other components that enable scientists to build large machine learning models from the massive amounts of health data that we have. So I would put medicine as, or the healthcare industry as the top industry that is ready to be disrupted by AI.
This is Ephraim Lindenbaum. I'm going to have to jump off here, but I want to thank everybody. I think this is a great category and look forward to seeing lots of growth and great startups going forward. Take care.
Okay, thank you, F. You know, I'll jump in and just let you know that the agriculture and food apps that I've seen, they are actually learning systems that imagine machines that go up and down a farmer's field or maybe a drone and can capture data on the crops and will eventually learn you know, when it has too much water, not enough water, when if it has a disease, what disease, if it's a pesticide problem or a pest problem rather, and it actually learns as it goes along and analyzes the crops and applies different inputs. So that's an application that I've seen in agriculture. Medicine, that sounds, I can see what you're saying. That sounds like a fascinating area for some disruption. Anything else that our entrepreneurs out in the audience might look at as the next up and coming place where they can apply this technology? Okay. Well, you know, we're at an hour now, and I do want to thank our panelists for being here. Very interesting discussion. As I said, you can find a recording of this webinar will be at the Royse Law YouTube site, the Royse University webinar page, and available for download as a podcast in the iTunes store. I also want to remind folks that this is part of a series. Our next program coming up will be health tech, health technology. That's technology that helps for better detection, prevention, and treatment of disease through less invasive procedures. That's on June 21st at 10 a.m. And then after that on June 29, water tech. And with that, I'd like to conclude the webinar. Once again, thank you panelists and thank you attendees for being here.